Greetings, everybody, and welcome to the 2021 Global Capital Summit in Austin. Sorry I couldn't be there in person, but I'm thrilled to be working with the sponsors here, and I will give you my views of what's going on and the emphasize new opportunity areas in venture capital and the tremendous amount of new availability there is for entrepreneurs and creative thinkers. And I'd say that before we go on to the next slide, that I've been through several of these circumstances or situations like this in my fairly long venture capital career, but I've never seen one quite this bad. And but being an optimist, I have always personally thought that times like this are the best times to be out there and be deeply involved in global innovation and entrepreneurial leadership, especially when we're coming off the heels of a pandemic like the one that we're not done with it yet, but we're getting pretty close. So next slide, please. I've always believed for the past 30 years or 40 years or whatever, that a vibrant venture capital ecosystem is vital. And so what I want to subtitle my remarks today is to the keys to global innovation and entrepreneurial leadership in a post-pandemic world. And that's the content that I want to talk about today. And next slide, please. This slide kind of speaks for itself. Global VC investments post-pandemic, everything is upward and to the right. And the public markets are not reflected here, but they're showing all of the same signs. If you put up a graph that I don't have in this presentation, you'll see that all of the really top-notch tech stocks and the ones that are publicly traded are going up, and global VC fundraising is also thriving in a way that I haven't seen in a very long time. Even though I'm not there in Texas, it's really picked up a lot of steam here in the Bay Area. And one of the things that I will start mentioning right now is that for reasons that have nothing to do with the pandemic, an awful lot of people are going back to Austin or are moving their companies there or whatever. And I think I think that that's a very wise move. Because Texas has, by the way, I was born in Texas, so I have at least some qualification to talk about it. And I've always loved Texas. So let's have the next slide now. Thank you. But let's look at it from a global perspective for a while here. There's been a tremendous increase in median deal sizes. Unicorns are back. This kind of summarizes some of the points that I made in the previous slide, but activity in the venture business all over the world is up due to the strong competition and oversubscribed rounds. And some of the hottest areas for opportunity are in life sciences, to be very, very clear. That by no means does that mean that conventional technology, the way we used to think about it, is passe anymore. It's just, all of these technologies, as they have evolved, they mature, and the really smart entrepreneurs and VCs that have devoted their lives to venture capital are taking advantage of that right now. And you saw some examples in the life sciences other area just within the last day or two about, I've forgotten which one it was, but there was some massive new drug that was introduced, and I'm not an expert in life sciences, so but I do know about semiconductor capabilities pretty well, and I think that the semiconductor industry has got a big problem right now, only because it has capacity problems in supplying the demand, and all kinds of companies that are in the press every day are testimonies to that. Next slide, please. In the first quarter of Q1, there was 69 billion raised across 3,000 deals in the US, and this particular graphic here shows the geographic breakdown of the deal count spread by various cities and metropolitan regions, I guess is a better word, that have meaningful amounts of venture funds in them. Next slide, please. This chart here shows the VC investments in Texas by year, and I think the interesting thing here is that you look at Q1 on this chart here, and if you annualize that right now, it looks like that 2021 would be the best year out of all the ones on this chart here that has ever been seen in Texas, and I doubt if there's anything before that. So the first quarter annualized means that Texas is really getting a tremendous amount of interest. And I actually can give you one very live personal story here. One of the people that I hired in my early days in my venture capital career, his name is Jim Breyer and we hired him into Accel Partners. He's just relocated to, he's got a new fund called Breyer Capital, but he's just relocated to Austin. So I think Austin is going to be a booming place for VC innovation opportunities, especially with all of the supporting academic. It has the right venture ecosystem, is the way we used to describe it in the old days when I went through a crisis like this. And so let's go on to the next slide now. I think it's going to be very, very successful down there. Go ahead, please. Next slide. And by the way, I got this chart here, and we switched the video or the photo around a little bit, or the titling here. There's a movement in Austin where I disagree with the wording, so I switched it to the one I would use if I were making it up. It's called Keep Austin Humming. And these are all the bullet points that helped me get ahead in my career. Emphasis on thinking outside the box, having a frontier spirit, and learning from Silicon Valley's mistakes. Biotech and pharma are two of the great opportunity areas at the current point in the economic cycle here. Q1 is tracking to exceed last year's 2020 record-breaking year, and so U.S. and biotech and pharma are really exploding, and the demand for their products and the innovation in this area is, I've never seen anything like it personally in my life. And, but I'm just trying to, make my analysis here be driven by the data. So I think that anybody attending the Austin conference here who's contemplating, either investing in, or if you're an entrepreneur joining a biotech or pharma, firm backed by venture capital, I would, say congratulations prematurely, maybe. But the other point that's always typically been true in biotech and pharma is that late stage, and usually it frequently exceeds early stage because of a lot of reasons. I mean, biotech and pharma are extremely risky, and they're very complex industries that they have a totally different business model than many of the IT related companies or the cybersecurity companies or things like that. And so I think we should go to the next slide now. Artificial intelligence is now in prime time. I'll just digress a little bit here. I gave a talk on opportunity areas just like this back in Israel a few years ago. And it wasn't, by that I mean like maybe 5 or 7 years ago, and I just talked to the guy from there the other day. And but the thing is that the artificial intelligence is not an industry. It's a technology now that has spread to all kinds of different industry sectors, and they're perfecting it. But the one word takeaway that I have on artificial intelligence for people that don't know it that well is that it's algorithms that are derived by analyzing data and creating, data-driven formulas or, relationships or whatever that show, the importance of, various technologies. And artificial intelligence applies to virtually, almost, there's some aspect of artificial intelligence and almost all of the new technology that's coming out these days that I'm aware of. Okay, next slide. I said other attractive, we just talked about life sciences, and that one's redundant. I mentioned cybersecurity before. If somebody has been watching the news at all within the last few days, there's a very long list of hacking incidents that are spread all over, and so cybersecurity is the way that those kinds of invasions, if I may call them, can be prevented from not the attempt to not be prevented, but cybersecurity puts a layer around the outside of the whole IT infrastructure there that that preserves the innovation that's already been going on in all these areas that we've just gotten done talking about. Radical changes in the digital infrastructure is another one. Edge computing, we're putting all the low latency apps out to the edges of the network. Carriers all over the world are making massive amounts of investment in 5G, which is, it's just kind of the current state of the art in wireless technology. There's a wireless Internet of Things that's also been, pretty, widely publicized lately, and I have some personal investments in that technology. And for a little bit of good news here, carriers are finally getting their fiber penetrations up to levels where it can make a difference. And then on the last bullet point here, I like a lot of innovation that's been going on in virtual meetings and distance learning. And these are all, not all of them, but many of them were inspired by by COVID-19, and you can all form your own opinions on whether you think it's almost over or not. I personally think that that it's pretty close to being over in a major league way here in the U.S., but you have to form your own opinion on that. And we're having big debates out here in San Francisco right now about whether the schools and distance learning are going to go back to normal. I don't think any of them are going to go back to normal. I think that distance learning is a fact of life forever here now. And that's going to require a lot of, innovations in technology, and there'll be plenty of things that can be done to make things better in that category, and make further improvements in the virtual meeting technology, like the stuff that we're using here today. I happen to have known and met I'll just give you one live example. I just recently finished up my term as the investment committee chief investment officer at the Jesuit University here in San Francisco. It's called USF. And one of the guys that founded Zoom went there, and so I had a chance to meet him, and we had dinner a few months ago, and he's just going over the moon with successful accomplishments, and it's Zoom-like stuff, and upgraded to the latest and greatest. And next slide, please. All right, here's the outlook. I think that 2021, I'm going to say, and 2022 are going to be very positive banner years for venture capital, okay? For all the reasons that I've been talking about. We have relatively low interest rates. That could change a little bit, but we don't control that from our perspective here. There's a very, very high amount, large amount, super large amount of dry powder in the venture industry. That's the amount of money that funds, VC funds that make investments have available to them. And dry powder means it's either money that they've already called from their investors and is sitting in the fund's bank account. It's just and nobody wants to go put it into treasuries anymore or any of that kind of stuff. We're going to see a big rebound in travel and tourism focused companies. I can't tell you the number of people that I know that are chomping at the bit to jump on the airplane and go somewhere, and you can count me among that batch. Okay. Next, we have continued financial services innovations like the special purpose acquisition corporations. I happen to be on 3 of those boards right now, and I think that we're going to see a tremendous amount of innovation in those areas. And a SPAC is basically where a company that's doing a great job of innovation, goes out and goes public. This was an innovation of Wall Street, for sure it was. Goes public and begins publicly trading, and with the help of many of the very best investment banks, they raise money, and then they hope to use that money. But here's what has to happen in a SPAC for it to be successful. Special purpose acquisition companies, the only way they fail is if they don't make acquisitions. And then I think as the final bullet on this slide here, the migration of top technical and management talent and investment talent to Texas is going to continue, and Austin is probably the most likely place where the top talent here that has more money than God, but that wants to still be active in the business, is going to relocate. And then they're doing it for a whole variety of different reasons. And Texas is not the only state. There are other states like Florida, but it's all the southern tier, states that that basically have not historically had super strong venture capital industries, is the way I would put it.